important it is to get those checks out to Americans and how big a swing factor it will mean on your GDP forecasts?
Sure. I mean, fiscal stimulus is extremely important in terms of being able to provide a backstop for the economy right now and offset the fact that the private sector has lost a lot of jobs. Income is being destroyed. So the quicker the government can provide those in most need with the appropriate funds, the better it'll be for the economy. So the more that this is lagged, the more we're going to see consumer spending cut back, and the more the economy is going to suffer in the next few weeks. So, yes, the timing and the magnitude of the stimulus are absolutely critical.
Yeah, 5 months, as long as 5 months for paper checks if you don't have direct deposit. Where are we on unemployment right now, Michelle? What's your best guess? Are we in double digits yet?
I think we're close if we're not there yet. So, obviously just about 10 million people filed for unemployment insurance between this week and last. Not all of those will officially show up as unemployed in the official statistics that are released in early May for the month of April, but a whole lot will. And we're not done yet in terms of unemployment filings. So, you can easily see in the April data, between 10 and 14 million people lose their jobs, show up as unemployed in the statistics, and that will send the unemployment rate into double digits. So this is happening very, very quickly, and that's the nature of the shock. This is an acute shock. It's shutting off parts of the economy, which is causing people all at once to be losing jobs.
Michelle, your latest GDP forecasts has now 3 quarters of contractions for Q1, Q2, Q3. Talk us through what the latest numbers are, how big the bounce you're expecting in Q4 is. And my final question within that is, what if there is a second wave of this disease? Is that factored in to you expecting a bounce in Q4 or not?
Yeah, so to walk through the forecasts, Q1 is likely to be negative just because of the last 2 weeks in March looking so weak for the consumer. So we're looking for a 7% decline in the first quarter annualized as a result of these lockdown measures prompting people to shelter in place and shutting down businesses. Q2 is going to be more extreme, so we think we're going to see a 30% decline on an annualized basis. Q3, we think we're going to see about a 1% drop. So we don't have the sharp snapback that a lot of other people have for the third quarter. We think it will take longer, and it will take longer because it will take time for the economy to reopen. You can shut the economy down very quickly. That switch can go off fast, but to put it back on, there's going to be frictions, and we do think it will take time. So it will unleash some pent-up demand and spending, and we think we'll see that show through probably some point in the summer with the consumer coming back a bit. But it will probably take time for business investment to recover, for housing investment, for inventories to be restocked. And to us, that will happen more into the fourth quarter. Now, you raise a really important point, Wilf, which is about this potential for a W. So you could see an area where if the virus isn't appropriately contained or it's spread elsewhere in the globe and there's a risk of it coming back here in the U.S., then sure, you can open up the economy. People can start to emerge again, start to go back to work, to restaurants and the like. And then there's a second spread, which would cause this kind of W shape. So I do think that this is going to take some time to get out of. It's not going to be a dramatic snapback, unfortunately.